for the time being, let's get you the latest on a new NSE listing. Now, this is not a new stock for the market per se. I'm talking about Westlife Foodworld. Mangalam caught up with Amit Jatia, chairperson of Westlife Foodworld, to understand what this listing on the other exchange means for the company. And he noted that shares of the company are already trading on the BSE.
Amit, thank you so much for joining in. Your shares were trading on the NSE already. So just wanted to understand what this listing actually means, what does it do, and how should shareholders really look at it? Because there is some confusion as to this new listing.
No, earlier, of course, we were listed on BSE, but we were trading on NSE. But now that we are listed on NSE as well, all our compliances, all our data will be readily available to all the investors on the NSE exchange. I think it does help liquidity, outside of which what it also does is hopefully as our stock and our company gets larger, we might come into indices that are linked with NSE. And what it does is it just allows investors to trade the Westlife stock anywhere where they like to trade on.
The obvious question then is that what took you all so long? Why didn't you all do this, say, a year or two ago?
Sure. I mean, my point is in life, there's always a time for the right thing to come. I mean, in the early days, it was more about just visibility, understanding that Westlife is listed. Today, with the trading volume being quite high, and as the QSR sector is taking shape as well, and now a lot more of our competition's listed also, and many of them are listed on NSE. So we said we don't want to fall back, and we want to be cutting edge in our opinion.
And you speak about value across the chain. What's done extremely well is the chicken sandwich offering, specifically in the southern part of the country. Just wanted to understand, what's the revenue mix between West and South for you? And with this chicken coming in, how does the needle shift in favor of South? Just wanted some numbers on that.
Sure. I mean, first and foremost, of course, we as a brand entered South almost 8-9 years later than West. So our brand, of course, was more formulated in West. And in the last 10 years, with almost about 150 stores now in South, we've really caught up. Unfortunately, as you know, we don't share breakup of our revenue. But particularly in the last 3 to 5 years, we've seen tremendous lift in our average sales per restaurant per year in South. And also, chicken has more to do with consumer preferences. In South, we find that chicken is really a very, very important protein. And along with our vegetarian options, where we are very strong, we had to enhance the protein that is a favor of the consumer. And therefore, with the launch of the fried chicken and with more recently the wings that we've launched, piri piri wings, I think consumers are now beginning to think of McDonald's as a destination for fried chicken as well. And as that is increasing, and thankfully our product has come out really well, we are seeing tremendous traction in South, which is kind of slowly catching up with West. So we feel that in the next couple of years, we should have a pretty even balance in both markets.
Just wanted to understand what proportion of a store's revenue currently comes in from McCafe, and how is that likely to grow going forward? I mean, in your overall contribution, what would McCafe be?
So again, we don't share breakups, but all I can tell you is that McCafe has grown 4 or 5 times average sales per restaurant per year in the last 4 or 5 years. And I personally feel the opportunities to at least double that, if not more, over the next 2 to 3 years. The reason is that all we've done is now McCafe has become synonymous with McDonald's. And now in the consumer's mind, a good cup of coffee is pretty much there from a McCafe point of view. But McCafe is not only about coffee. McCafe has beverages. So there are other platforms in beverages that we've not even really talked about. And there is this ice blended thing where we do very well globally. There are smoothies. Again, we've never gone on television or really talked about our smoothies, our shakes, and so on. And therefore, in my opinion, McCafe journey is just about beginning, because 80% of the restaurants now have McCafe. So we have the scale and the size to really start playing with the beverage platform. So doubling to tripling average sales per restaurant per year is at the minimum. along with getting 100% penetration of McCafe. So both are on our agenda.
As always, you've given us qualitative details but no quantitative numbers. So let me just press you on the last one for quantitative numbers. The last time we joined you, we were joined by you. You gave us an operating performance guidance for about 150 basis points improvement in your margins. But importantly, the revenue range that you gave was 18 to 25%. That was bright. That was rather wide. So just wanted to understand if you would revise that or make it narrower for us for FY24 in terms of performance.
Sure. No, I mean, see, I'm a firm believer that we set a vision, and it's Vision 2027 that guides us, where we are talking about almost doubling our sales. And based on that, I gave you kind of an average number. So I like to stick with ranges because, economy is very volatile globally and things happen out of the blue. And therefore, we like to play with the range. So I stay with the 18+% total growth for the year. And in margin, again, the point I was making, you have a good memory, that typically we've improved it by 100 to 130 basis points. We do intend to take this to the very high teens through Vision 2027. And therefore, we are hoping to see a similar increase year on year. But I look at it in blocks of 3 to 5 years. 1 year is just a bit of a guidance, a tool to see where we are heading.
All right, Amit, always a pleasure speaking with you. Thank you so much for joining in and wish you good luck. You've set an aspiration of being part of the Nifty 50. We hope that happens sooner rather than later. Thank you.
Interesting chat there. Thank you very much, Mangalam, for taking us through that. Get into a break. On the other side, we'll discuss market technicals. Ashish Keala, Wave Strategy Advisors, joins us next.
A road trip in a